Today I'm going to talk about the difference between technical analysis and fundamental analysis. So, let's start off with definitions. So, technical analysis is the study of charts, volume, indicators, or trends to predict future prices. While fundamental analysis is using earnings, revenue, or projections for growth. So let's get into examples of each. So let's start with fundamental analysis. So this is the chart for Netflix. This is the 1-day chart. So each candle here represents 1 day. So fundamental analysis is basically the analysis of a company's financial reports. So let's say, do you see this jump up in Netflix price? So you see this it's a 9.69% increase from the previous day. So this increase happened because Netflix released their earnings. This is their earnings. It does not look too surprising, right? So you have 1.52% surprise and 1.33% surprise. Basically, I'll just tell you what these mean. So earnings, so basically the standardized earnings means earnings that remove the one-time purchases or one-time selling of assets. Let's say a telecom company, they want to sell one of their telecom towers and they sell this to another company. That is still revenue, but is that the company's revenue, or is that consistent revenue? It is not consistent revenue, as it's a one-time expenditure. So this is removed from the standardized. So Netflix doesn't really have too much of these type of infrastructure selling. So they're standardized and their reported is really close. Reported is the total including these fixed costs. And this basically means this 4.267 and 4.27. This is the earnings per share. So this is their total earnings divided by the total amount of shares. And when they say surprise, this is the consensus. So the estimate is 4.206. So this is what they estimate the earnings of the company, and it turned out to be 4.27. So this is a surprise of 1.5%. Now for revenue, this is the total revenue made for the company in that quarter. So this is the period ending December 2024. You have a surprise of 1% because the reported is higher than the estimate by 1.3%. And so you might ask, with these small revenue beats, you see these 1.5, 1.3%, how did this make the stock jump 9.69%? It is not only the revenue and earnings that can move a stock. For example, there was some news that came out in regards to Netflix. So it was not just about the earnings and revenue. For Netflix, it is more important about their subscriber growth, and this means that more revenue could come in future quarters. So example, if we look at the CNBC article, we can see that the earnings per share is not that big of a beat, the revenue is not that big of a beat, but the paid memberships, this is a big beat. Now, 290 million was the consensus for the amount of memberships, but this turned out to be 301 million. Now, they say that this could be because of Squid Game and Jake Paul versus Mike Tyson and NFL. So there is a catalyst there. And these memberships, a lot of people often forget to cancel, or they just don't want to cancel because they're already content with the service. So this number is really good and really bullish for the stock because it shows that people are interested in the stock, and it's not just about current revenue and earnings, it's about the projected earnings and revenue for the future, because that is what accounts for the value in the stock. So this is the reason why the stock popped that much, even though you can see here it's not that big of a beat for these surprises. You see the surprise of 0.64 and 134 million, it's not that big of a beat. It's because of this catalyst, the membership increase, that the stock went up so much. Now let's check another stock with a fundamental analysis. Let's check RCL. So this is Royal Caribbean Cruises. So they basically operate cruise ships. You can see here when they say earnings, this is basically saying that they released their financial statement. So Look at their financial statement. It is up 9% compared to the consensus, and this is why the stock went up 12%. This is purely on a revenue beat. It's mainly the revenue beat. There's not like a really big catalyst, unlike Netflix with the subscribers. You can see that even though the revenue did go down, this is basically on par with estimates. As you can see, 3.76, 3.76. So this is basically on par. You can count this as on par. This is the big catalyst in the earnings and revenue. You always have to check the earnings of the actual company before buying a stock, and you want to check when the earnings are coming out, when the next earnings are, to make sure that you're not buying during a volatile period. Now, let's look at technical analysis, which is basically the study of charts, volumes, indicators, and trends. This is more of the speculation side of things, and it's like trying to understand the price action of a stock. So this is more inclined for short-term movements. So this is more short-term, while fundamental analysis is more long-term. Because usually financial reports come out quarter by quarter and quarter. So you would only really get catalysts every quarter, unlike technical analysis where there's a lot of stuff that can change based on indicators and whatever the market perceives as some sort of support, resistance, all those type of things. So let's get an example for technical analysis. Let's say NVIDIA. So you can see NVIDIA, if I was a technical analysis person, I would immediately identify a resistance here. So this is the all-time high. It touched this point 2 times. Basically, this means that it touching this point and coming back shows that this is a resistance. It shows that the price can't break past this level. And then it further is confirmed by the second move up. It tried to move up. It tried to come back to touch this level, and it got rejected by a big red candle. So this demonstrates that sellers are present at these price levels, and if you look at it without the last few bars, buyers were present at lower levels like 130, 135, while sellers were holding 150, 153. This was, of course, until recently, where there was the DeepSeek model from China that was announced that tanked NVIDIA stock because NVIDIA was kind of the pioneer for chips in AI, and the fact that a company could do this with a smaller power of chips kind of ruins their monopoly on the AI market. But that's more of the fundamental side of things. But if we look at it another way, if we look at it here, we can see another sort of evidence for the support and resistance theory. There's obviously a resistance here. You see that it tries to touch this price, this 97 price, and then it pulls back and it tries to touch it again, right? And then it pulls back, and then after a catalyst, which is the earnings report. Now, if we want to use our fundamental analysis, we can check this earnings report and see that it is impressive. This is impressive growth, and you can see this is why the stock popped. Now, we can draw the resistance line over here because price was unable to break this level, and the stock gapped up past this level. This demonstrates strong price movement and demonstrates some momentum, and the fact that buyers are now overtaking this seller area, because this is usually where before a lot of sellers sold the price down. And the fact that this level was broken demonstrates some strong price movement. Now let's move on to another stock. Let's go to Tesla. So for Tesla, you don't for any other stock, you can also use RSI, which is the relative strength index. So it is basically a tool that measures the strength of like the momentum in a stock. So you could see here that we can first use support and resistance, so we could see that this is one of the common levels where sellers were able to keep a cap on the price, right? Until there was a catalyst, okay? It might not be an earnings report. In this case, it was due to the election and politics. and this caused a major buyer takeover of this one seller area. You could see the price moved up here and it came down, it moved up again, then it came down, then it moved up again, then it came down. Then there was a catalyst that broke out the stock. Now we can use the relative strength index to measure this type of movement, or understand the strength of the momentum in a stock's movement. So you typically, in the RSI, you typically want to sell at levels like 80, which show overbought. It shows that the stock is currently overbought. So you can see here, at this sort of price range, the RSI indicator was saying overbought. And after this RSI indicator showed overbought, the stock corrected. Now, of course, this is not always the case, but it is a good indicator to check when a stock is rallying too much or correcting too much. And it's sort of an indicator for momentum. So traders typically want to buy at levels like 80 or 70, depending on their sort of confidence level in the momentum of a stock. And they typically want to buy when the stock is at levels like 30. As you can see here, let's see here. The stock reached an RSI of 27.28 and it briefly rebounded. Of course, this is just a measure of the momentum of the stock. Now we can see that basically a consolidation makes this also consolidate, and this shows like that the price is able to maintain in this area, and it can show, if this RSI continues to trend downward, it can show that the stock is like undervalued or it's oversold, and this can lead to a further price movement. But what I like to use, I don't like to use the RSI. I like to use like price action and volume. So let's go back to NVIDIA. You could see that during this DeepSeek announcement, there was a huge amount of volume. You see this? We can check the actual amount of volume. That's 818 million shares on the SIBO exchange, compared to like the averages of around 200 million for 200 million shares for other days. So this demonstrates some sort of strong price movement because there are a lot of buyers and sellers, and it shows that there is a strong movement in price with strong volume, which backs up this movement. Because if there's weak movement to back up a strong movement in the price, it demonstrates that not a lot of buyers or sellers are present in the market, and it shows hesitation. Now let's look at another example. Let's show you sometimes how trading on breakouts or breakdowns might not always work in your favor. Let's look at Apple. Apple had this movement upwards, then after it hit the seller region where sellers took control, it corrected. But actually, you see this correction over here, this was due to the carry trade for the yen, and that might be another topic for another video, but this was not really due to Apple, it was due to the overall macro market. But anyway, if we talk about support and resistance levels, we can also see that there is a pretty good support here, a pretty good support around this level. As you can see, resistances can turn into supports. This area was like a resistance before, where the price pulled back, and it later became a support for further price movements. Anyway, going back to our resistance, Apple touched this resistance 2 times before a catalyst or just market sentiment pushed it past this price, and a trader trading on these breakouts would enter here, as it is a confirmed breakout around here, which is a confirmed breakout from this sort of structure and channel over here. But as you can see, even if there's a strong momentum, it is not always gonna follow this momentum. It's not like a surefire way to make money, of course. So there was a pullback and some sort of correction upwards over here, but it just demonstrates that not all breakouts lead to breakouts and then sustained price over here, or breakouts then it will just keep going up. No one really knows the market. People use technical analysis to try to understand the market, and as I said, my support earlier, this support kind of held. Even though this price didn't touch it, buyers were able to buy back from this second support over here, this support from this recent low. So it's kind of tracking the lows and the highs and market psychology. Like if a person saw that the stock was 220 and then they missed out on buying it, then it went all the way to 255 and then it came back to 220. A lot of people want to enter back because they want to say, they think that, oh, now it's cheap. I missed out at 255 and now it's back to 220. I'm getting a discount, so I might get in. That's kind of market psychology behind supports and resistances. Anyway, that's technical analysis and fundamental analysis explained. Hopefully you learned something in this video, and see you next time. Peace.